Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500. Most of the markets are the same indices: US, London, Europe, Australia. The wave count that we're tracking down is falling into place in terms of the little 1, the 2, the 3, the 4 and the 5. A little bit dodgy in here, but there you go. And we've got this little push to the upside here, bouncing off the 1350 there, the midpoint for the Dow Jones, working on a larger number here, the 12,500. Also the same little wave structure moving down through here, and the same with the Nasdaq as well at 2,500, the compositive. This little move in through here, if we have a look at that on a smaller structure, we can see it here, and you can see the 5-wave structure to the upside. So it's an impulse wave, an A and a B, and 1, 2, 3, 4, 5. A little bit more to go there. Once that 5 waves complete, we'll see an A and a B and a C wave, and then another 5 waves up. But beyond that, we can't say too much at all, because we're not sure if that this is what type of low this is in place through here just yet. So we've just got to stay within this degree of structure for the time being in terms of this up here for wave 1, or an A wave, wave 2, or a B wave, and wave 3 or a C wave. So we don't know past that for sure just yet. So that's a bit of a problem. The same with the UK market here. We've got little 5-wave structure here, the 1, the 2, the 3, the 4 and the 5, and there'll also be the 5 in here as well, a bit squashed up. But we're also looking for the bounce here as well, and that would be the same with the DAX as well. Of course, you need to always work with the closest, largest number, and we're right on a low here for the DAX, so you need to be on the 7,000 there. You can glean one small position there, and then you need to work through subgroup 1, which is the 10, 20 and 30. If support is found on top of subgroup 1, 30, then you can be pretty much assured of getting to the midpoint. You can take profit there or hang out depending on where the wave structure is, and then look to get support on the midpoint to get up to group 2. The Australian market's pretty much the same as well in its move down as we're looking through here, and we're seeing the push up through here. The catalyst for this has been US lawmakers looking that some agreement will be made on handling the financial situation for the US there. So we may see more of a rally come from there, maybe a stronger catalyst. So we'll see what comes out of the gate there. Alrighty, let's have a look at commodities, as the US dollar index has made that one more high there. So let's have a look at that. Okay, starting with gold here, pretty much the same story that we've been following. So we're still expecting another move to the downside here, because we're looking at this being wave 1 up through to here, and then we're looking for, keeping it simple, an A and a B and a C wave down for wave 2, and the C wave's always got 5 waves in it, so we see that's a strong wave in the middle there for the 3rd wave, and the A, the B and the C here for the 4th wave to come through here. The 4th wave's always complicated. If wave 1 and 2, if wave 2 is simple, wave 4 is where you get triangles and so forth, larger sideways patterns, and that's pretty much what's happening here. We know there's good support on the 10 and the 20 here, but look, it could just go straight up from here, and if that is the case and it finds support on the 1720, well then you go along from there. But the Elliott count is just suggesting another move down lower, which could certainly come down below the 1700 here, which is close to the 61.8 retracement level of wave 1 to the upside. Silver's much the same as well. As we mentioned the other day, just following the gold pattern. It's very complicated to the downside through here, very messy. So just base it off the gold price. So we just really want to get confirmation that that's in there. We also want to get confirmation that the US dollar index has turned as well. So as this is coming down through here, we want to see the US dollar find its top there, and that's what we'll be looking at in a moment. The main thing here for us is really the copper market here, and look, as you can see, it's just been some consolidating through here. Still expect another low to come in through here. It just hasn't arrived just yet, but it's getting closer. If we look at that on the daily pattern here, on the sort of 2-hour chart here, as mentioned before, we understood that this was an A and a B and a C here. As well, it is if this comes down, taking that low out through there. It's quite close, but it does appear corrective, so we have to assume another move to the downside through here, which of course will be weaker for the materials sector. So keeping an eye on that. Let's have a look at the FX. Okay, with the US dollar index here, we've had we're looking, as you know from the Elliott charts, we were looking for one move to the upside, and that's occurred now, and so now we're looking for this to move to the downside. But we need to be really careful here, because it's a very tricky structure to the upside, and it doesn't count well. So we've done our best with it, but at the end of the day, this 81 here, we'd want to see that rejected as a resistance here. So we'd want to see, a move. It will bounce off here, of course, and come back up, but we'd want to see it move down below through here, and then find the 81 as a resistance, and also rejected at that point as well. So we need to see that 81 as a rejection to really sort of lock that in there as a resistance point through there. We can see, don't worry about the wave count, here's just an alternative count. We can see that we've got a little sort of 5-wave structure to the upside through here. So it should be interesting to see what occurs now. I would actually, in terms of the trading levels, I would be actually looking at this as a bullish situation, and that means because it's got support on 81, so minor trading level 1, and then it's trying to find support on the top of subgroup 1, which is the 8130, the 10, 20, and 30 make up group 1, and we're looking for support there. So this swing above here would be a swing back down into. It can drop below the pivot, the 20. But if it finds it as resistance, then that's the first sign of weakness. If that becomes the resistance and it drops drops down through that, then that's weakness at that point. But it can come down through here, and on the retest here, if it comes back up and comes through and finds support here, then that's a positive thing to the upside. So that pivot through here, the 2 there, is really important as a sort of a guiding factor with what's going to happen in the next larger degree of structure. So you can keep an eye on that if this market interests you at all. And of course, that's obviously going to reflect the euro as well. So with the euro as well, if I just sort of come back here, it's a 15-minute chart, so it's a little bit squashy. So what we were looking for here is we were looking for a little 5-wave structure to the upside here, and then we were looking for wave 1, and then we're looking for wave 2 to come back, 61.8%, which is a bit overreacted there, but that's okay as well. So we do need to see the market move. We cannot see this penetrated down here again, this 127. If this moves down through here, then we know we've got a bigger bearish picture. And that could certainly be the case as well, because this bothers me here, this particular structure here, in terms that it's actually 5 waves down and not 3, in terms of down for 1, back for 2. This is the whole 3rd wave down through here, the 4th wave and the 5th wave here. So that really makes that an impulse wave. So this could be down for wave 1, back for wave 2, either to here, and then move down through here, and that you need to be short at that point there. The other thing that it could be is just the A wave of wave 2, which would be the 1, 2, 3, 4, 5 for an A wave, up for a B wave, and then down for a C wave. But at the same time, we don't really want to see the 127 become the resistance at that point there. So there's if this was in a nice clean 3 waves here, then would have no problems in going long at this stage. Now the other possibility, the other thing here that's positive is that this little move up here is in 5 waves as well. So it's not complete yet. So what we can assume, the same with the indices as well, and they'll be on the same track, is at least an A and a B and a C here. Otherwise, it's up for 1, back for 2, and up for 3 and 4 and 5, and moving up through there. So we do need at least 2 sessions, or probably 2 sessions, maybe 1, probably 2, for this to play out in this space here before we can really sort of pin it down. So just be aware of what I've said there. If you have gone long through here, if you put in a limit order to go long to catch the wave 2, then just be aware of this 5 wave structure through here. And if it is 5 waves here, then we'd be looking for an A, B and a C here, and then, you know, looking for a short setup on this side here. So just be a little bit careful. Just give it a little bit more time to play out through there. The Australian dollar as such, where were we the other day? If we just squash this up a little bit, since the last time we spoke, we were looking for okay, I'm not sure where we were, but this is what we've got. We've got wave 5 down to here, wave 5, the fifth wave of wave 5, and it does appear that we've got a corrective move happening now in terms of this move up through here, the A, the B and the C for the A wave, and then an A and a B and a C for the B wave, and then we're looking for 5 waves up for the C wave here. So in terms of this C wave moving up through here, that will be in 5 waves. We would be looking at this in terms of, let's have a look here. So it does appear that we've got wave 1 to here and wave 2 to here, and we've got a 3rd wave unfolding to the upside through here. So we've still got the 3rd, the 4th and the 5th here that could take us a bit higher. So that should run with the S&P 500 to the upside. So can be looking for a retest into these areas up through here. It's probably a good idea to have a look at the 4-hour chart on our website to get an idea of the possible downside future for this here. So once this C wave's finished here, we'll be looking for a short trade to the downside. So another way, if it just failed from here, for instance, one way of looking at it is that this is group 1 here, the 10, 20 and 30. If the 103.20 became the retested resistance, gaining a small position in this area here with the view of actually looking for the retest of resistance at the 103 here is what you would be looking at. Otherwise, we'll just wait for the structure to move to the upside there. And if you wanted to trade it long from here, then you have to wait for the midpoint here, the 103.50, to become the support here. And if you're scalping, then the idea would be to trade to the subgroup 2 area here, the 65, take part profit here, take all the profit at 72, and if 72 eventually became the support, then you can move back in by getting a small position above the 72 with the view of adding above the 80 and looking to get closer to this area up here. The 103.97 is where you'd start pulling out from that point there. That's just working up the ladder through that way. So yeah, alrighty, well that's about it. So the catalyst for the bounce is the US lawmakers looking for a positive resolution on the financial situation in the US, so that would be the catalyst for it. But we see the bounce off the 12,500 for the Dow and 2,500 for the Nasdaq and 1,350 for the S&P 500. We see those as technical points where there will be orders and a bounce would come in through that. The Elliott ending patterns fit that as well. The bounces that are occurring through through the markets. We don't know what kind of legs that they're going to have in them, what kind of structures they're going to produce. We do know in the substructure level, we know what will come, but the next degree higher, we're just not sure about that, and that will take from Wednesday to Thursday to unfold. We do have Thanksgiving in the US on the 22nd, which is the Thursday, as a holiday, so you need to put that into consideration as well, because there will be a lighter volumes coming into the Wednesday, and of course the Thursdays won't be trading. Well, some of the markets will, the futures markets will be moving a little bit, but they'll be on low volume as well, and then the Friday coming back in. So you need to accommodate that that situation coming through there. So yeah, a little bit more sort of neutral to into that period there. But let's just see what comes out of it. Let's see what develops on the Monday and the Tuesday, and the Wednesday will be a bit of a deciding factor. So just be prepared to be flexible, to be changed from net short to net long, or vice versa as well. Being net short, protecting positions, being neutral, and then being short again, because a small loss is better than a big loss. You need to have total control. Alrighty, well that's it. Good morning, good luck, and enjoy the weekend. Doing this on Saturday, so enjoy the day ahead.